Hey, Tim Hart here, Van Dyke Mortgage, talking to you about self-employed borrowers trying to buy a home self-employed. You poor people. I empathize with you. I think that you do have a raw deal when it comes to financing a mortgage, and that's because we want to see, and so does every other lender, all of your tax returns and all of your expenses. And Tim, I had $1 million in sales. Yes, but you wrote off 900,000 of it, right? So that's a big thing with self-employed borrowers. They have the great credit scores, they have the down payment money, they have the assets. Their issue is they don't have the provable income. Provable being, here's my 2 years tax returns, and this is the average of my 2 years tax returns. They don't qualify with that income for the new mortgage plus their car loans or whatever else they have. So what we have is we have a program, we call it bank statement loan. Not that original of a name, I get it. But 12 months or 24 months of business bank statements. We'll use the average deposits going into their account. So they'll take, let's just say you have $120,000 in deposits over the year, all right? So we're gonna take that, you divide it by 12, that's $10,000 a month, and we're going to allow 50% of that income to be used to qualify you, $5,000 a month, all right? So $5,000 a month right there in that scenario is used to qualify them for the new mortgage, whereas their tax returns, that income may have been like $2,000 a month, all right? So we're increasing your borrowing power using your bank statements. Yes, you're gonna pay a higher rate, all right? You're not gonna get normal conventional loan rates or FHA rates or anything like that. But you have to remember something. You are now going self-employed borrower who can afford these types of payments and these more expensive houses. Well, now you don't qualify for a $200,000 house. We're out here looking at $600,000 to $700,000 houses. All right, so you've increased your borrowing power a ton. Now you're looking at houses you actually want, that you can afford, that you qualify for. The only issue is you got to use your bank statements to do that because you don't claim enough money to the IRS. You can pay more money to the IRS and claim more income. That's going to take a good year or two before we can even use that income. So your choice, you're the borrower. Just know there's an option out there. Self-employment income, bank statement loan, 12 months or 24 months of business bank statements, using the average deposits for income, and maybe you get a sweet house instead of going through the BS you got to do with the tax returns. All right? So you got any questions, concerns, give me a holler, 239-437-4278. Thanks, guys.